Dan. And now I'm pleased to recognize the other distinguished gentleman from Virginia, Mr. Bobby Scott.
Thank you, Chairman Coble, Ranking Member Cohen, former Chairman Conyers, and other members of the committee. I appreciate you holding today's hearing on the Business Activity Tax Simplification Act introduced by my colleague from Virginia, Bob Goodlatte, and for providing me the opportunity to testify in support of the legislation. The Business Activity Simplification Act, or BATSA, has attracted strong bipartisan support over the last several Congresses, and I expect this version to attract the same amount of support. BATSA seeks to update a 50-year-old federal statute that determines when states can impose state income taxes on the sale of tangible personal goods in the state. Over the years, states have adopted a series of business activity taxes that are proxies for state income tax, including gross receipts taxes, licensing arrangements, and other charges that states frequently seek to impose on out-of-state companies. Some states have enacted overly aggressive and often unfair business activity taxes. Businesses in my state have been acutely affected by these aggressive business activity taxes. Smithfield Foods, located in Congressman Forbes' district, has had its trucks threatened with confiscation by New Jersey tax revenue agents simply for driving down the New Jersey Turnpike. Virginia-based Capital One has joined other financial institutions in becoming easy prey for other states and localities seeking to increase their tax revenues by targeting out-of-state businesses. Other sectors of the Virginia economy, such as manufacturing, information technology, franchising, media industries, all have been targeted with overly aggressive business activity taxes in other states. There is an urgent need to modernize this decades-old law. BATSA would clarify the standard governing state assessment of corporate income taxes and comparable taxes on businesses. Specifically, the bill will articulate a bright-line physical presence nexus standard that includes either owning or leasing real or tangible property in the state, or assigning one or more employees to perform certain activities in the state for more than 15 days in a taxable year. No one is arguing that the business should not be responsible for paying taxes where they do business. However, BATSA would ensure fairness, minimize costly litigation for both state governments and taxpayers, reduce the likelihood of a business being double taxed on the same income, and create the kind of legal certainty and stability for business environment that encourages businesses to make investments, expand interstate commerce, and create new jobs. More importantly, the bill would ensure that businesses continue to pay business activity taxes to states that provide them with direct benefits and protections. I appreciate the subcommittee's focus on this timely matter and look forward to working with you as we pass this important legislation, hopefully during this session of Congress.